Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fine.
Good morning, everybody. Well, man. So OBS updated their application and like they changed the interface and everything is bigger and it's really throwing me off. Sorry. Oh yeah, you know what else? We should have music. There should be music. Okay. So let's go to the charts. Well, we got a Federal Reserve meeting this week. Well, they're on a little bit on the downside here this morning in the Treasuries. There was a bit of upside, but it looks like since they've come down. Normally, we don't move too much before a Federal Reserve meeting, but I think that this is a situation where we should be on our toes. I think that there's going to be people placing bets going into this Fed meeting. I think that everybody's expecting Powell to say something that could potentially move markets. So let's keep an eye on it. I should note, just coming in here, the first 15 minutes or so of the Treasuries have been pretty mild. So this is looking like a pretty typical lower activity Monday. Not really seeing a whole lot of reason to be trading at the moment. S&P 500 jumping over the weekend over trade deal with Europe. So that's like the last big remaining one. I kind of feel like with the tariff thing that so far things are going pretty well. When it started out and it was like, okay, we're going to do this huge tariff on everybody, that was like, oh, what's going on? But since then, it's been pretty good. 10 to 15% tariffs on most people. Got a trade deal out of most of them. And now they can focus on the big one, China. So, going pretty well. S&P 500 likes it. Oil on the upside this morning. Gold and silver. Well, gold is still kind of reeling from those last 2 days last week. It looks like overnight they went a little bit lower, but recovered it. Silver, not as bad, right? Kappa kind of holding that new higher price around 5.8. Japanese yen still kind of moving and down, frankly, which is interesting because isn't the Bank of Japan expected to raise rates? Oh yes, and you're right, Andre. Thanks for reminding me. They are doing a decision this week. But the dollar looking really good this morning. That's interesting. And then the Bitcoin had taken a little bit of a hit, but they recovered it over the weekend. Now, there's one other thing. Where is it? So we're supposed to get the Treasury refunding announcement today. And I don't know what time it is at, and it is not on my calendar. You guys know? Let's ask ChatGPT. Okay. 8:30 Eastern. Oh, so it's already happened? and then the schedule will be released on Wednesday. Oh, no. This says at 1 o'clock. Wait, it's contradicting itself. It's saying it's at 6:30, but then it says the first release of marketable borrowing estimates occurs at 3 p.m. Eastern time. Which again, not on my calendar. Andre says it's tomorrow. I don't see it tomorrow either. There are a lot of earnings calls tomorrow. There is a 7-year auction tomorrow. I really hate when there's auctions like just before the Federal Reserve meeting. You have it on Financial Juice tomorrow at what time? On the 29th? I don't see it. Say 4 p.m. Eastern time. Visa earnings, Starbucks, gasoline, rated means, CPI, Australia, US-China talks tomorrow. I just don't see it. What is the text? What is it listed as? Yeah, I forgot you're in Romania. I was reading this story. U.S. Treasury refunding estimates. Refunding. Ah, there I see it. Okay. You're right. It's on the calendar tomorrow. Right after the 7-year auction. I don't know how I missed it. Okay, well, I was kind of wondering if I was going to need to come in here and be a little bit more, on my seat. But it looks like the Treasury is pretty dead at the moment. So I've been thinking, I kind of feel like now is a good time to shake things up. I was kind of thinking about some of our discussion last week and being like, what should we be doing? But the more that I think about it, the more that I'm like, no, I think we already know what we're supposed to be doing. And I'm just kind of dragging my feet about it because really I've got a few little programming projects here that we want to get out of the way first. And then I need to spend more time doing the machine learning. I think that we're really, really ahead of the curve when it comes to order flow, but I think I'm really behind the curve when it comes to statistics and machine learning. I really want to get some of that in. So I saw a video yesterday. What's his name again? delta trend or whatever. And he was programming, he was doing opening range breakout. He was doing orb. And he added in a machine learning component to basically only take the trade when it thought that it was a high probability setup based on, you know, a bunch of different factors that they were adding in. They were based mostly on price. And with the machine learning added onto it, the strategy was profitable over a 5-year history. Granted, he was backtesting it in trading views, so that's one thing that you kind of got to keep in mind, because trading view gives you like 1 or 2 ticks more than it should. I don't think that their backtests are very accurate. But, you know, if it improves a backtest that much in trading view, it will still carry over into the stuff that we're doing, you know? I really think we add some machine learning methods onto some of our order flow stuff that we could get something that's really, really powerful. And I just haven't been messing with it, you know? That I need to do that. And I think more broadly that because we only got 90 minutes, that I really need to focus more on programming stuff. Right? Because, you know, of course, keeping us all informed and understanding what's going on in the market, I think is really, really important too. I mean, that's the thing that we do that I don't see. You know, it's kind of weird to think about. Yeah, let's go. I want to believe that RE machine learning, yeah. Right? I don't know if that's machine learning's enough to put you over the. I think part of it is, like, the more you know, the more you understand the market, the more that you kind of just come to the conclusion that, like, well, maybe it's just not worth it for me to take risk. But I don't want to believe that. I think that we still need to take risk. I think that taking risk is an important part of society, and it's something that we need to do to grow, and it's something that we need to do to make money. And so really it's just the risks that we take should change, right? The risks that we take should change. But, you know, I'm seeing more people start to come out and say, look, smart money concepts doesn't work. This doesn't work. This doesn't work. We're back testing. So there's these guys are going back and doing some of the stuff that we did many, many, many years ago. Although I would argue that the way that they're doing it is better because they've got the machine learning added onto it, right? But I'm still not seeing anybody in the retail space just talk about knowing what's going on in the market. Like, there's a Federal Reserve meeting on Wednesday, and I think you gotta have a game plan. I think you gotta have a game plan set up for that, you know? Morning, Kevin. Coming to the conclusion that it's less complexity and more executing is the real edge. Well, I think it's more nuanced than that. I think because what I'm realizing is that having a successful mechanical trading strategy really requires a great deal of sophistication. It's something that I think I'm capable of doing, but I don't understand yet, and it's going to take a long, long time to really understand it. I really envy some of these kids that they're picking that stuff up in school. They're going to be really ahead. But the problem is that when you're there in the moment, you can't be so sophisticated, right? So you have to create a system that allows you to have both. That allows you to have a very sophisticated strategy, but all of the analysis and sophistication has been done ahead of time so that when it comes time to execute, you can just focus on executing. Yeah. By the way, what was Brad saying about just happened to inspect the Fed building this weekend? Lol. Was that went into DC to do a Tim Pool event and drove by the Fed building. Really? That's cool, man. Oh, you have some concerns. What are the concerns that you have with the renovations on the Fed building? I think we only learned during execution. You think they're spending too much money? You know what, Brad? I think that you're probably right. Like, I would expect the Fed to spend a lot of money, and I would want the Federal Reserve building to be a really nice, prestigious building. But in the current political environment, that's bad. Very, very bad. And they spent too much, and it's hurting them politically. I think that if they had not spent so much money on the Federal Reserve building, that Trump would probably come up with some other reason to criticize him. But what you gonna do? I really wonder. When I was showering this morning, and one of the daydreams that was going through my head was like, how come we don't see a lot of discussion from Fed members about how the economy is being impacted by artificial intelligence and how the Federal Reserve might need to adjust going forward? Like, it seems to me that artificial intelligence is likely to be the largest deflationary force in history. And that would probably mean monetary policy needs to be more easy. But I haven't heard any comments really talking about that. Elaborate on how it is deflationary. Okay, so when I say something is deflationary, what I mean is it has a tendency to make prices go down. So over time, the cost of goods will decrease. Right now, the cost of a good is about 50% labor. And maybe even more than that when you're talking about services. So if you have AI able to come and do it, well, I don't think you're going to be able to completely eliminate the cost of labor. You're still going to have humans in some form, and you're still going to have, costs for maintaining the robots. So labor is still going to be a cost, but just imagine that the price of every good declines by 25%. Like 50% of it is labor, and then let's just take half of that out. Right? That's the cost of everything goes down. So the way that central banks deal with this is they print more money. They print more money to ensure that inflation still rides at that 2% target. Otherwise, CPI would go down, right? Consumer price index, everything's declining in price, and so you would see the cost of goods go down. So we have to create a certain amount of inflation to offset that. So that's why probably lower interest rates. That's why I think that after all of this is kind of said and done, that we go back into a period similar to the period between 2008 and 2020 Although maybe that's just my own wishful thinking because those days were good for markets, right? The 3D printing space is getting nuts also, which will decrease prices. Have you seen the things that people do with like printing their own keyboard bases now and stuff? It really is getting bonkers. I'm looking at 3D printers, so I'm getting feeds on metal 3D printers, and it looks very promising to even get a metal 3D printer at a low. Yes, there are metal 3D printers that, you know, of course they're a little rough, but they still allow you to make things that you couldn't make before. Are really, really impressive. Yeah. Belligerent, welcome back. I haven't seen you in a while. Anyways, on the Federal Reserve meeting this Wednesday, so because Trump has been hammering Powell so hard, and he was kind of he said after meeting with Powell and touring the facility and everything, that he thinks that the Fed is ready to start reducing rates. Probably because Powell told him, well, we're really likely to cut rates in September. Not because Donald Trump changed anything, but because it's just time, right? But markets moved on that, right? And the meeting before the first cut is always a little different. So I think, and then on top of that, there's the August 1st trade deadline, which we got all of the major trade deals. So maybe the market will price less volatility for that. But I think that there's still some reasons to be a little bit on edge about August 1st. So we still have to negotiate with China, right? And student loan forgiveness forbearance ends on August 1st as well. And I think that the student loan forgiveness has been a major boost to the economy. I don't think people realize how much money was coming out of the market for people paying back their loans. And it does contribute some inflation. And that segment of the population that are younger, you know, like they'll spend if they can, right? So I think that's going to have a measurable effect. Oh, a gap fill on the ES today? I suppose. I don't know. We've done some stats on the gap fill, but I don't feel like that it's sophisticated enough. I think that there's a good chance that you could get a quick backfill and then move higher, but I kind of have met energy on it. Well, we'll see what happens when they open up. No, it's really all kind of just coming back in a circle, right? It's like, okay, so I feel a little bit behind because I'm always wanted to get more into this machine learning, and it's always kind of like right on the precipice of it, and we don't do much with it. And I think part of it was that I felt like that I needed to bring frameworks in and do all of this complicated stuff, and seeing Delta Trend Trader do it in TradingView, that just says, oh, well, there I can program my own algorithms like that, like random forests and stuff like that. So we need to do that stuff. So am I behind? Well, I'm behind in that respect, but I don't see pretty much any other creators really talking about the market, like macroeconomics, you know? Why is that? Yeah, well, you know, and the thing that's really weird about it to me is that I feel like that kind of content would be perfectly suited for social media. News. There's certainly a place on social media for news. And financial news is a significant thing too. But I don't see that much discussion about daily financial, like the kind of, like, why isn't there a social media competition to CNBC? And I think the reason is because the social media audience does not seem that interested in it. Maybe I've kind of pigeonholed myself into a certain place in the algorithm. But whenever we try to make content informing people about future events and how to plan for them, they don't do well. Like, the day traders aren't interested in that stuff, even though it's probably the most relevant stuff to them. The kind of person that's really interested in the news like that either becomes a journalist or, like, goes into political science, things like that, you know? I don't think that they become day traders. So maybe that's a bigger advantage for us as retail traders than we think, you know? And that's something that I don't see a lot of these other creators have. It's something that I think that we could help those other creators with, right? So that's another thing that I keep thinking is some of these guys, I have spoken to them a little bit and tried to help them a little bit. But, you know, if I'm having trouble breaking through, I can make sure that they understand the message as much as possible, and maybe they're the ones that break through, right? So with that said, I want to see, is there a way to access footprint data in TradingView? TradingView allows you to view volume footprint charts, but programmatic access to this data within PineScript is limited. And it gives me a really, really long. Okay, their footprint requires the subscription. It gives me a link where people on Reddit are talking about, which is what I just found 8 months ago, so it's relatively recent. PineScript allows retrieving data from lower time frames. Let's open it up here. Do I have Pine editor? Create new indicator. Untitled scripts. Why do we care about TradingView? Because we are going to make the inventory cost basis in TradingView so that it is available to more people and so that we can view stock data with it. And then I think that we try some machine learning stuff. So with the amount of time that we get here during the stream, I can maybe do it in the week, during this week, but probably I'll end up yapping too much. So is there a save script? Okay. I know. Like that's so weird with TradingView. Maybe it's just a personal bias of mine that like when I see somebody's trading with TradingView, I automatically assume that they don't really know what's going on. You know? Like which really shouldn't be the case, because I really do think that TradingView has possibly the best charts at this point. They have possibly the best charts. PineScript is similar to Python. Snobbery is real. Yeah, it's just, it has some of the best charts, but the reality is that that's like the default thing that people use. And especially if you're trading in futures, you don't actually use TradingView to execute. I guess that's part of the issue, is that you could read really good charts in TradingView, but you can't execute. And execute is there's a lot involved in execution in terms of like making a tool chain. So yeah, it's not tick based. That's my understanding. But my recollection was, because we were looking at a script that did it, and I can't find it anymore, but we looked at it on a stream one time, that you can basically, well, and maybe we already got the part that we need. You can use this request security lower time frame and set the lower time frame to be 1 tick. And then do your stuff that way. And it's not going to be as accurate as the data that we get over here, but it will still be enough for us to be able to build a footprint, essentially. Let's read this script. I really wonder when TradingView stops giving PineScript coders only breadcrumbs in new releases in comparison to all the other features that are introduced, like visual stuff, new brokers, etc. Just one example, in May 2024, the volume footprint chart type was introduced, but as of today, we are still not able to use the chart's highly interesting data in PineScript. There are numerous examples where developers ask for new features and data access for PineScript, but nothing happens. We always get the same reply that the request is noted and discussed for implementation in the future. This really sucks, and I'm thinking about switching to another platform where developers get more data access, and future requests are normally implemented with a foreseeable timeline. User manuals, release notes, documents, a steady stream of additions and updates to the language. User suggestions have always been the foundation, blah, blah, blah. Oh, it's Pine Coders. It's a person. They have like a YouTube channel or something. A TradingView supported group of programmers. Okay. Well, maybe we can ask them. Pinecoders.com. If you have a question, it's probably already in our FAQ. They have a Telegram. You know, I like never use Telegram, and I'm kind of like, I don't know if I want to go and download that just to talk to them. the link though. Hmm. You know what else? I never figured out what's the deal in TradingView here with the UI being so big. Density, classic, compact, normal, comfortable. Compact, one, compact. I used to really care about these stats in TradingView, but now I'm kind of like, do I really need them? I can put it in the same window as the chat. How about that? Yeah. Like it. Oh, no, wait. No, I don't like it. So now it's too wide. Okay. I'm just going to get rid of that. There. That's better. Well, that's not really helping. This thread doesn't really help. Good oh yeah, you good point there, Octavius. That it came up to the seller's cost basis and bounced down off of a 30. Well, it's only a 4 ticker, but it's still absolutely bounced. There's one from June 1st. Use TV volume footprint in scripts. Is the volume footprint chart data available to be used in scripts? I couldn't use any info. Oh. It is important to note that in PineScript version 6 release notes from February of this year, the ability to call bid-ask data was introduced, which can be used to further enhance your code. Wait a second. February. Here we go. We've removed the scope count limit. Previously, any script's total number of scopes, including the global scope, blah, 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 blah. We've introduced 2 new built-in variables, bid and ask, providing access to real-time market prices. We've bid. So they're giving the best bid, best ask. These variables are only available on the 1T time frame. And they're just sending me to the release notes. Let's click bid here and go to the documentation. Bid, the price. The bid price at the time of the current tick, which represents the highest price an active WIT buyer is willing to pay, blah, blah, blah. This information is available only on the 1T time frame. On other time frames, the variable's name is NA. If the bid ask values change since the last tick, but no new trades are made, these changes will not be reflected in the value. This is only a variable. So that's interesting. Okay, let's try. Thinking about asking an LLM. Should we stick with Gemini here? Okay, you're right to question the implementation of bid-ask methods on the 1T timeframe in TradingView as of this feature includes the ability to access real-time bid-ask data. But it does indeed have significant limitations, and according to this, a video about spread in PineScript. Here's a breakdown of what that likely means. One-tick chart. First, the one-tick time frame. This means the bid and ask data accessed via PineScript are only available on charts that display. Let's add over in here. We'll add some notes. Yeah, it's not historical data. Okay. Press security lower time frame. He's using float. Ask price equals request dot security sim info dot ticker ID 1 key ask. So I think if I add it to chart, it's gonna say don't be like, nope, you can't do that. Oh, that's it right there. Okay. Yeah. Get nothing. I did one tick. Do I get one tick with not expert with other plans? I guess I need somebody that has trading view tested. Okay.
Block cell.
Okay, that was weird. 3K sell into 27, pushing new lows. Maybe we should not be doing this thing in PineScript. Well, let's stick with it here for a second and try and add like community footprints. This one says that it is only for real time. But it doesn't look like I get the code. Protected source script. Invite only script. Oh, that's cool. This one is importing somebody else's. Oh, is Trading IQ made one for us? Granularity. Type footprint data. Up volume, down volume, total volume. This one looks like it's probably the closest to what we want. So I think, if there's no objections, that I am just going to come in here to my house basis. This is interesting, but I don't know if it's really worth me putting an insane amount of time into. I don't know. Am I retreating too soon? Just, I look at this script. Let's look at this script again. I'm not sure what it's trying to do here. Makes new footprint data here. FD. FD dot delta array fill all up volume down volume FD total volume. Right, so it's making a footprint, setting them all to new floats. It's passing those floats into fill all. If not use CVD. So what happens if it does set to use CVD? Yeah, I don't understand what it's doing there, to be honest with you. Because it seems to me like it's taking three and, it's just initializing an object with default values. And it does fill all. Comes up to here. The granularity is 1 tick, so we skip this bit. And then do delta array dot fill. What does this, or does this fill? Okay, so we fill the first element with what? Isn't delta array something that's passed in? I think this is probably the key. Oh, let's see here. Array from 00050 equal array from.
Block cell.
They're gonna sell further, huh? Well, I kind of said we'd need to stay on our toes because I think people will make some bets going into this FOMC. Kind of not playing out the way I thought, though. Like, it just seems to me like an odd time to be shifting. Did I miss a news headline here? Trump is speaking. Oh, okay. Oh, I don't have my news squawk turned on. That'll help. Iterates through the lower time frame data. OLTFD. Ah, right. Okay. Rest, security, lower time frame, ticker, TF. Volume. Close, high, low, bid, ask, close. Interesting. Get vol is adjusted to be negative if the lower time frame bar closed down. I don't think that this would be very accurate in treasuries. But they are getting bid and ask. Like, this is a new script. Right here. Is it right here? If granularity is 1 tick, yes it is. For int I2 size -1, get volume, get low. So they're comparing the close of the bar to the bid ask. But I think that you're only going to get that bid ask when it's running live. This is the IQ that we know. I guess we can ask him. That was the, where did it go? That was the piece of code that I was looking for. And then this one is like the volume divided by the range. So they're I think it's basically saying like, I'm kind of guessing because I don't understand their syntax here very much, but I think that they're going like, here's the top and the bottom, and here's where the close was. And since this is like 70%, that means that 70% is going to be buy and 30% is going to, or sorry, 70% is going to be buy and 30% is going to be sell or something like that. Which is what I thought. Which is what I thought it would be. So why do I feel so pessimistic about it today? Is it just because I don't want to do it? Maybe we come back tomorrow. I'll feel different. I'll feel different and be like, all right, let's do it. Maybe it's because as I'm reading it, there's a little bit too much syntax here that I'm kind of like, okay. That doesn't necessarily, like these things don't really make sense to me. Yep, volume equals this, which equals this, which equals this. What? Like, that doesn't make sense to me. That line doesn't make sense at all. Oh, I used Gemini. That Gemini was the one that was breaking it down for me to help me find this spot. Because when I was just scanning it, I couldn't figure out which part mattered. This is the key part that we would have to clip. I think that the next thing I could do is I could ask it, okay, using this script as a basis, create a script that will show me a footprint for the whole session. That will generate a footprint that's just the whole session instead of every bar. There are some things in there that are like, it has to know how big to make the data structure, and so they're using these interesting tricks to figure that out, which I think is interesting. But yeah, I guess tomorrow we can probably try and make it work. Maybe I'm gonna do it and I'll be like, well, I don't know why it was. Maybe it will be useful. We'll see. But we're running out of time today. I think that we made better progress on it than last time I looked at this. So. Right. So for now, I'm going to close it. What? New York City's We're with Colbert rally for late night host is a bust with only 20 protesters. That is a little wild, but looks like Reddit's still super interested in the late night comedy thing, even though nobody watches late night comedies, so why would anybody care? But Trump to balance budget by introducing square jar for Democrats. From Babylon B. Oh, man. All right. Well, there's our bell. I think we made some good progress, and I think, I can look into some machine learning stuff in my own time. So, yeah. I will see you guys tomorrow. All right. Stay excellent.